Hello and happy 2026, everybody. Let's fix that camera a little bit. How is everyone doing? Steve, Jake, Bushman, Ty, we're all back in business. Yes, as Mike just put up on the chat there. Happy to have everybody back. Happy to be back. It was a heck of a break. Great trip out to the Rose Bowl. Obviously, the culmination of that football game was tremendous, at least for those of us who are Indiana fans. And now we get to go head to head with Oregon on Friday night, and then the Bears on Saturday night. So, boy, what a week coming up. But welcome, everybody. So, boy, 2026 starting with a bang here. The first day today. This is going to make, I think, Santa Claus green for the Santa Claus rally. This is the first trading day of the year. Actually, excuse me, second trading day of the year, which is the last day of the Santa Claus potential rally. So we'll see if this market can hold everything that we see here. And oh, yeah, by the way, lots of geopolitical news over the weekend that's going to probably affect the markets for a while. So with that, I'm not sure how many of you actually read my week ahead. Okay. But what I did in there was, last week or a couple weeks ago, I did a review of the year and the markets. This is a review of the VIX, what I want to go through. And we had some major swings, major fluctuations in the VIX all year long. And you know what? As you'll see as we get towards the end of this, pretty darn normal. So let's hop right into it. Just as a quick review, what is the VIX? The VIX, the volatility index, what it does, it measures expected S&P 500 volatility for the next 30 days. It trades live on the CBOE floor. You guys have seen me down there live before in the pit. And what it does is it indicates market sentiment. It indicates market sentiment for you, for me, for institutional investors, retail investors. So it is really the go-to when people are looking at protection, people are looking at hedging portfolios, or even if you're a craps player, the don't pass line when you're betting against the VIX. So obviously 2025 was a major news driven year for the markets, from all of the Fed drama to tariff situation, right? Then what happened? The AI bubble that people thought was happening, right? Just a couple months ago. And we saw a VIX actually hit 60 during the year. We saw a VIX hit 60 during the year, which does not happen very often at all. But the bottom line is, even with all of the fluctuations that we saw, and we're going to go through them here in a moment, if you understood the VIX, if you understand volatility in the marketplace overall, boy, oh boy, we were able to take advantage of that. And the markets really reacted kind of as they always do. So what do I mean by that? Well, here's the VIX over the last 100 years, everybody. Okay, this is over 100 years. Okay, so we can go all the way back here to the dot-com bubble. Now, what you will have to realize here is the VIX was not a product. It was not a thing until, whoops, I am trying to get my pen up here. It was not a thing until the 1990s. But you can go back and you can see what those measurements would have been. Okay, so if we go back all the way to the Great Depression and then 1933, the market crash, and backward date everything that happened here, you can see the VIX topped out at about 70. Okay. And then for the next, basically till Black Monday in 1987, okay, the VIX never hit 60 again. Even with everything else that happened, recessions, bear markets, Eisenhower, Kennedy, Nixon, the oil crisis of the 70s, energy crisis, until Black Monday, we never saw 60 again. And how long did that last? Nanoseconds in hindsight, right? And then we had the early 90s recession. We had even, I don't know how many of you remember this. I was trading on the floor when the long-term capital blow up hit the markets in the late 90s. We didn't even get 60 there. And we didn't even get 60 on the VIX in the dot-com bubble, in the NASDAQ bubble. We didn't hit 60 again until 2007, 8, 9, the global financial crisis. And then it took, yes, the COVID crash beginning of 2020 to hit 60 again. And we topped out at 60 just earlier this year. Okay. The bottom line is, though, everybody, and you know, we all are scared, right? We're inherently, that's human nature. We all want protection. We all feel that unease when things are out of whack. But we got to remember to remain cool, calm, and collected, which is the way that 2025 started out. Okay. A year ago, Christmas time, Santa Claus rally time, the VIX plunged. It plunged, and it did creep back up kind of mid-January-ish, but everything was normal. We saw VIX in 14, 15 range, and actually it did creep up above 20 for a hot minute. But between January, February, we saw a VIX range of 24 to 22. Back and forth, back and forth, back and forth. And then, oh yeah, we had heard about these potential tariffs leading up to Liberation Day. Okay, we had heard about that. Didn't really know what the heck was going to happen. Okay, and boy, trade rhetoric really rekindled volatility. Okay, it started climbing up a little bit prior to Liberation Day. And then it took off. And 60 was that number again. 60 was that number again. Now, what does that mean? Before we move on to what the VIX did during the year, let's just quickly review how you calculate the VIX, what it means. So to calculate a daily implied move in the S&P 500 per day, take the VIX. Okay, so right now, where are we trading? The VIX is trading, let's just see where we are on the VIX right now. The VIX is 1483. Okay, the VIX is 1483. If we take 1483, okay, not divided by 252, which is the number of trading days in a year, but if we take the square root of 252, okay, that's the key here to figure that out, is you want to take the square root. So if we take 1483, I'm good at math, but not this good, divided by roughly 16, okay, we get 0.92 and change. So a VIX of 1483 is implying a daily move in the S&Ps of just under 1%. Okay, just under 1%. Remember what we have talked about in the past with the VIX and the power of 16s, right? 16 is the equivalent of a 1% daily move in the S&Ps. Okay, now, if we wanted to figure out, okay, what's the implied weekly move in the S&P for each week? Okay, rather than divide by the square root of 252, the amount of trading days in the year, we use same thing, but the square root of what? 52. If you want to do it for a month, use the square root of 12, so on and so forth. So that is just, kind of a reminder, simple mathematical equation that you can always figure out or always use to figure out what the heck the VIX is really telling us. We know that 16 is, that 1% move. Okay, well, if we're 32, that means the VIX is implying a 2% daily move in the S&P. A VIX of 48, 3%. So when we got up to 60 in that VIX, which literally has only happened, was it 5 times over the last 100 years? That VIX of 60 is representative of just under 4% daily implied move in the S&P. Okay, so what happened after Liberation Day? Okay, yeah, it was the taco trade, April rebound, and just as quickly as the VIX exploded to the upside, we saw it come crashing down. Okay, so again, I'm not suggesting that when we see volatility spike like that you just go out and short everything. And when I say short, I'm not necessarily talking about direction of a stock. I'm saying short volatility, short selling options, selling the VIX, whatever it might be. However, if we look at historical trends, we know that was, in hindsight, the trade to make. And no, we're not Monday morning quarterbacks. We're never going to trade that way. But at the very beginning today, I said, this was a year that if you kind of followed those historical precedents, boy, you got paid out. You got paid out. So from the Liberation Day lows to the end of May, the market rallied 35%. 35%. Crazy. So what happened once we got to the summer? And there's that Route 60. I went through the explanation of, of 60 and the significance of VIX at 60. Okay, well, here we are. Here's what happened this year. Obviously, here we are in April Liberation Day, and as fast as it went up, came crashing down. And then you can see pretty much throughout the summer here, all the way up till, really October, okay, the VIX never really broke 21, 22 area, right? It stayed in such a tight pattern. And mean reverting is always great, Kevin. The problem is timing, right? We can follow the lead of being mean reverting. And so when VIX spikes, you want to sell that volatility. But we don't know if that mean reversion is going to happen tomorrow, in 3 days, next week, in 3 weeks, whatever it might be. Obviously, if you have that time on your hands, that's probably an opportunity you want to take advantage of. Never using just naked short options, but plenty of ways, as we have done, to sell volatility and be completely hedged, where you know what your maximum loss is. So all through the summer, we had lots of Fed talk. Nothing really happened. Um, you know, renewed U.S.-China trade war talk. That's kind of what we saw back in here, this area right here. And then what happened? Then we got the Fed. Then we got the Fed starting to step in October, November. So now you're seeing in this area right here, everybody thinking about, well, what's the Fed going to do? Are they going to cut? How many times are they going to cut? How deeply are they going to cut? So we saw that vol elevated again. Certainly not up to 30, 50, 60, but we saw it elevated. But what also do we see? Right? It's almost like looking at an earnings volatility chart, right? Where, boy, we see that big progression, that big explosion up before earnings. And then once the news is out, good, bad, or indifferent, right? We see it breaking back down. So that was August. We got the really bad jobs report that came out in August. So that was part of this spike in here. We got inflation concerns to go along with the Fed in October. But if we fast forward that then to the holidays, back to Christmas, the last couple of weeks or so, there we are, kind of right back where we started, literally from 1 year ago. Literally from 1 year ago. So despite the fear that happened around Liberation Day back in April, okay, we saw things normalize. We absolutely saw things normalize. Bottom line is, if you followed the price action, the historical price action in the markets, whether it was within the VIX or the volatility of your favorite stock or the volatility in the Qs, whatever it was, you made out. We're always going to have noise around the markets. We're always going to have geopolitical risks. We're always going to have eco data risk. Okay. And I'm not saying that we 100% of the time follow that immediate pattern of mean reversion. But 2025, we sure did. 2025, we sure did. Just remember, everybody, for those that are, afraid of heightened volatility, typically heightened volatility brings us lots of opportunity. So all in all, I'd say 2025 is pretty darn normal. Pretty darn normal. What's in store for 26? Well, like I said, today's day 2. Today's day 2, and already there is a monster geopolitical event affecting the markets. But you know what? This geopolitical event, the markets are screaming. Volatility is not going down as we normally would see with a huge market rally. But I think vol is not going down because it was already so cheap. So who knows what is going to happen? Who knows what's going to happen with earnings? Who knows what's going to happen when it comes time for Powell to be done and the new Fed chairman to step in? Who knows what's going to happen this Friday when we get jobs report? Right? Respect history, folks. Respect history. Does every situation play out the same every time? No. But respect history. And my little Lou, who's back in town, she loves the VIX. Little Lou loves the VIX. She's rolling all over the place now. She's holding her bottle. I mean, oh my God. So little Lou loves the VIX. And I have gotten a ton of emails, and deservedly so, for being very, very late, very tardy on sending out swag. That is totally on me. I don't have anybody else do that for me. That is totally on me. It is coming. I promise. I promise. I promise. I got a little bit of a backlog, but it is coming out to everybody. All right, let's go back here while you guys are putting up VIX and while we get the wheel ready here. Let's look at the 100 years of the VIX. The 100 years of the VIX. If there's one thing, Lou is now 3.5 months old. If there's one thing that you can confidently glean out of this chart here, okay, is that spikes in the VIX typically don't last very long. I'd have to go back and look at, a much tighter timeline here. But boy, every time we saw a spike, I'm looking at this here, it seems like it was so short-lived. Okay, so respect the VIX, everybody. Just like any other technical analysis, data that you would use, historical data, respect it. Respect it. Any questions, everybody? Wheel's going to close here in just a moment. We can go back through this equation here if you want. Okay, the wheel is just about to close. Any questions, anybody? There you go, Greg. If everybody could, man, there's 200 people here today. I think the people were clamoring for Market Minds again. Give us a like. Smash that button. Okay, and again, here is this year. Here is this year. I needed to get back into Market Minds, Thomas. I missed it. I definitely missed it. Thank you, Steve. But the Rose Bowl was outstanding. You're welcome, Greg. Anybody that's ever been to a bowl game, I've actually never been to a bowl game before, but to go and what, especially when it's your team and then the outcome the way it was, it was pretty crazy. Are there what for VIX options? EQUs. What's that, Bill? Square root of 252 is roughly 16. It's like 15.9 and change. Happy New Year to everybody else as well. So you can just use 16. When do I recommend you buy a call? Is that specific to the VIX or something else? And no, we didn't see where they put together all the parade floats because the weather was actually pretty crummy. So we actually did not see that. We did get out really super early in the morning at like 9 o'clock to tailgate for 3 hours or so. Robert, you are very, very welcome. All right, let's see. Where's my wheel? There it is. Yes, there it is. Oh man, I liked it when we had the holiday colors. I don't know about this red and black anymore. I really like those holiday colors. If the VIX tends to revert back, is there a calendar play to buy far out and then keep rolling the short? So what you have to remember before we spin the wheel, Bear, and everybody else, Bushman, who said I did? Randy, VIX is a tradable symbol. Yes. Some platforms use it as dollar VIX, dot VIX. Dorothy, we can definitely do that for next month. But Bear, what you have to remember in terms of calendar spreads for any futures product, which the VIX is, okay? Just because we have a difference in volatility month to month in the VIX doesn't mean it sets up just as a calendar does when we're trading in an equity or a stock, because those stock prices, or excuse me, those option prices are all tied to one stock price. When we look at the VIX, because it's a futures product, each different expiration has its own stock price, let's call it futures price. So it makes calendar spreads very, very difficult. Bushman, what'd you think about that keg stand? I don't know if I want to expose myself here with that keg stand, but yes, I did do one. All right, guys, let's get to the first wheel spin of 2026. Here we go, everybody. Winner, winner, first one of the year. Thomas, Todd, Tony. Who's it going to be? Todd Lindbergh. Todd Lindbergh, are you still in the house? I know I saw you earlier. There he is. All right. Todd, way to go. Way to go. Congrats on being the first winner of the year. Shoot us an email. And as I said earlier, I promise, this is totally on me, not on anybody else. I will 100% absolutely get those swag items out. Before we leave, guys, I've got KTOS back on the screen here. Okay, anybody that is in this KTOS position here, what are you thinking? There you go, Bushman. You got that right. I will post this up here for everyone. And then I'm going to post it up in the room if you want to get a early order in. I will be sending a complete exit in KTOS at 3.25. Okay. All right, everybody. So glad to be back. Thank you, everyone. Sometimes VIX and SPX are not inversely correlated. I think I observed it last Friday. Any reason for that? Well, today is the same thing. Today they are not inversely correlated. They're moving together. SPX is much higher. The VIX is a little bit higher. 95% of the time they are correlated, or I should say inversely correlated. All right, everyone. Again, appreciate all of you. I will be back tomorrow. Look forward to seeing you then. Bye-bye.